All right, welcome to the live. We're just going over what we learned so far before we head into the new lesson, right? I'm gonna go over history and see if I'm missing anything so far, right? Okay, trends, continuations. Mm-mm-mm. Bum, bum. Opening demo, opening live. All right, so let me just say this is what we learned so far, right? Um, things to take into consideration. You learn this lesson, right? You are taught this lesson, right, in one class. No, it doesn't take one class to master this lesson, right? After we've taught everything that's on the schedule, the list I have to teach, right? It's your job to look at these videos multiple times, and it's your job to actually go on the market and test it out. Go on the market and practice what you've learned, right? Go and basically repeat what you've learned, because through repetition is gonna become natural to you, right? So you want this what you've learned so far to become second nature in a sense. You just want it to be a part of you, and to do that, you just need to do it through repetition, right? We have something called chat time. Basically, the more time you spend on the chat, the more the chat becomes a part of your life, the better you get good at it. So you have to think of it as basically like you're having breakfast, or you're learning, your baby learning a new language. You gotta make it a part of your life, because this is a part of your life. So it needs priority, right? In your life, right? So I just wanted us to have a look at what we learned so far. That this is basically what the new students learned so far. The advanced students learn quite a bit more, right? But once we get over this basics, then we go into the intermediate, then we go into the advanced stuff, right? But in order to understand the advanced stuff, you need to know the basics. You need to have the basics down pack, so you don't have to go back to it, right? So the plan is, after you learn everything you need to learn, you basically practice it. We basically practice it. So we're gonna have sessions where we actually practice, we back test, right? We make trading plans. We go through that trading not really journey, but what do you do when you look at the market, right? So what we're doing today, today we're going to cover, right, risk management, one of the most important topics in forex, right? Touch on mindset and how you should take the signals, right? Because if you haven't real, if you're an experienced trader, right, and you spend some time learning how to trade, and you actually know how to trade, no, you actually have a strategy that works, right? The first phase of trading, you have to find a strategy that works, right? We have a strategy that works. We know it works. We see it every day. We catch hundreds of pips, right? more than the average. But you'll come to realize that you could have a winning strategy and still lose, right? You could have a winning strategy and still lose because if you don't apply the right mindset, the right plan, the right risk management, the strategy will work, right? So today we're gonna go over the most important risk management, right? And basically how you want to actually be trading your account, right? How you calculate your risk, um, the risk management plan, right? We're gonna have a risk management plan, and I promise, as long as you follow this plan, you won't lose, right? This plan is lose proof if you follow it. Following it is a hard part. Discipline is the hard part, right? But if you have discipline, um, and you follow the plan, then the plan is set up in a way for you to come out on top, right? So let's get straight into it, right? I want you to participate in this webinar, right? Let me ask you a question. From what you've seen so far, right? The strategy we have, how would you rate that win rate out of 10? Let's say we take 10 trades. What percentage is our win rate based on the strategy we have? People, you could say it aloud or you could drop it in the chat.
I'd say 70%.
Okay.
Yeah, I'd say 70 to 80%.
Okay, somebody say 50%. Somebody say 70. I'm not sure that. Oh, 33%. Yeah. No, 66%. Yeah. Ramir, Dijon, what do you say?
Yeah, I'll say 70 to 80%.
How about you, Ramir?
I would say about 90 to 94 or so.
Okay. All right. So we established that yes, we have a winning strategy, right? No,
Yes.
a winning strategy in the forex world could be considered a 30% win rate. If you have over 50%, then awesome, right? But to be considered having a winning strategy, it has to be over 30%. And that's small, right? That's 3 out of 10 trades, right? So in the forex world, 3 out of 10 trades you're considered a winner, right? And I think we all agree that we could win more than 30% of our trades, right? So knowing that we can win 30% or more of our trades, I'm going to show you a plan now that you only need to win 30% of your trades to be profitable, right? Because at the end of the day, the goal in Forex is profitability and consistency, right? If you're in the signal room, we have profitability. That's if you decide not to take your own trades. But at the end of the day, you want to be a trader to take your own trades, right? And we're going to get into the signal room just now because I have a lot to say about the signal room, right? So yes, here I have a simple diagram, right? Let me know if I need to zoom in more for you to see it, right? So I wrote this up maybe back in September, right? So this shows basically like a risk management plan for a 30% win rate, right? So we're starting off with $1,000, risking 5% at a 30% win rate, right? Now, when you're calculating your decisions in Forex, you have to consider one, how much you're risking, two, what is your potential win rate, and three, your risk to reward. You see, in Forex, risk to reward is more important than pips, right? Pips don't really matter that much. Counting pips don't matter that much, right? It's your risk to reward that matter, right? So instead of we being happy about pips, yeah, you catch 100 pips, but what was your risk to reward for that 100 pips, right? What you put on a line for that 100 pips? Sometimes people catch 100 pips, but how much they risk? They risk 100 pips. That's a one-to-one risk to reward, right? And with that risk to reward, you won't really be as profitable, right? You need to win 50% of the trades to break even on a one-to-one risk to reward, right? So the real money is in risk to reward and not essentially pips. Pips look beautiful on the chart, but it's really the risk to reward that matters, right? So we have a minimum here of 1 to 3 risk to reward, meaning you risk 1 to gain 3. You risk $10 to gain $30 per trade. If you gain more, then that's a bonus, right? But for now, 1 to 3 is the risk to reward, right? So here we have the number of trades, 1 to 10 trades, risk / gain, the balance, the profit, the loss, the result, right? I did this, I wouldn't say randomly, but even if it wasn't a random order, you would get the same result, right? So here we had a first trade for $1,000. We risk 5% to gain 15%, so we make 150, right? The balance goes to $1,150, right? For the first trade. So first trade, we climb up to our balance is now 1150, right? Second trade, we lose 5% of that balance, which was $57. So our balance goes down to 192, right? So this was the pullback in our account balance, right? This is where our account balance dropped. It dropped 5%, right? Now for the next trade, we won 15%. So 15% of 1,092 is roughly $163. So now the balance is 1,255, right? So here is where the balance climb up again, right? Next trade, we lost another 5%, which was $62. Balance drop, and then for the next trade, we win another 15%. So the balance rise, right? So risk 5% for 15%, right? Now for the rest of trades, we just kept losing, right? 5% of 133.70 was loss of $68. We go down to 1,300. 5% of 1,300 lost 65. We go down to 1235. 5% of 1235, 61. We go down to 173, right? And then so on, right? So after those 10 trades, we win one, we lose one. We win one, we lose one. We win one, we lose the rest. Essentially, we only won 3 times and we lost all the rest, right? With that 30% win rate, after 10 trades, we are in profit. We made $58, right? That's after losing 8 trades and only winning 3, right? So this, when I say risk 5% in the signal room, this is exactly what I mean, right? If you risk 5%, then your balance should be growing, right? Even if we have a losing trade here and there, because pips don't matter that much, right? It's risk to reward that matters. So here I have, okay, after a 30% win rate, 3 to 10 winning trades. I start and balance at $1,000. Risk 5 to gain 15. Risk to reward once 3. We have $1,015, right? No, that is after 30% win rate. Now I have it here for a 50% win rate, right? And if you look at the charts, right now I have it win, loss, win, loss, win, loss. But it doesn't matter which trades you win and which trades you lose, right? As long as it matters, you win half of those trades, right? Your balance will end up being the same amount, right? So it is important to write a trading plan and stick to it. This is one of the hardest parts about it. Running a winning strategy is not hard. You just need to find somebody with a winning strategy. And there's lots of winning strategies out there. But the hard part is discipline and sticking to the plan, right? No, here's your exercise, right? You write down I will stick to my trading plan, right? You read that every day. Plan your trade and trade your plan, right? If you plan your trade and trade your plan, you have no excuses for not making money. Because remember, this is a career. This is not a hobby, right? This is priority in your life, right? You have to treat this. This is your future. You get what I'm saying? So you have to treat this with some sort of priority, right? Trading is a business, right? Do we make 15% because we close at 50 pips or 100 pips? Well, that depends, that depends, right? You see, most of the time, the risk to reward is more than 1 to 3, right? So closing out at 100 pips, you're probably securing a percentage of the account, right? But for that you see that varies because like I said before, risk to reward, right? The target might not be 100 pips, right? The risk might not be 100 pips. So it's a lot to take into consideration for that question, right? But we could probably do a little calculation for next time, right? So, but that where I say to close out at 100 pips, close out at this pips, that's a very good strategy I learned from a very successful trader, right? That's just like securing your positions, right? Because if the market pull back, you could just add more positions if it pull back to your entry, right? If the trade is still valid. But back to the topic at hand. So this is what to expect with a 50% winning a win rate, right? If you stick to the plan. So wherever you're at right now, I just want you to say I will stick to the plan, right? I want you to say I will plan my trade and trade my plan, right? Write that down. Stick to it. Let that be a mantra, all right? So everybody in this call said our strategy is definitely over 30, definitely over 50. So you have no reason to be blowing accounts in the market, right? So, and I finished. So, I have a little, no, I was not going to use this. But anyways, how do you calculate your position size? So, like I said before, I mean, if you've been trading a while, you can just calculate it in your head. If you're good at maths, you can just calculate it in your head. But, for those of us who need to help, like myself, there's an app. I drop it in the group chat called Stin U. Is actually the same as this website we on right now. So when you get a trade and you decide, okay, you're gonna take this trade, you hop onto my FXbook/position size calculator, right? You type in, you're finding out what lot size you need to use to risk 5%, right? You type in your account size, $1,000, for example. You're risking 5%, and then you type in how much pips. So if it is 20 pips, you use the calculate. So here's the result. You know you're risking $50 if you have $1,000, right? This is the units, but this is the lot size. So this is where you enter into the trade. That's if you're risking 20 pips, right? 0.25, right? The amount of pips you're risking will determine your lot size. So sometimes you might be risking 100 pips, right? If you're risking 100 pips, we know it's at 0.05, right? If we're risking, let's say we're risking 76 pips, right? Our lot size would be 0.06, right? Let's say we're risking 37 pips, right? Our lot size would be 0.13. So throughout your trading plan, your lot size would be adjusting depending on the pair and the amount of you're risking. Now, what obstacles you're gonna face when you're doing this is one, patience, right? Because sometimes we might be risking 100 pips on a trade, and when you're risking 100 pips, you're trading a daily chart. We know the market is going to take days to move. So, you know, you might be in a little drawdown, you might be in a little profit, and then you just run out of patience. You don't stick to the plan, and you close the trade. And once you deviate from your trading plan, you could consider yourself that you're already lost, right? Because the trading plan is there to protect you, to elevate you, conserve your capital, and gain, right? Because really and truly, you're in this for the long term, right? You're in this for the long run, right? So we stick to the plan because we know the plan works. We know the plan is gonna make us money, right? So now we know one, what to expect from the 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 risk management plan, right? If we have more than 30 or 50%, we know how to calculate our lot size for our risk management plan, right? We go to a position size calculator and you stick to that plan, right? Now there's another thing I want to show you along the lines of risk management, right? Here we have the AstroFX strategy calculator. So basically, this calculator will tell you how much you're gonna make if you stick to your plan, right? This strategy is gonna tell you how much trades you need to take and how much you'll make at the end of those trades if you stick to your plan. So let me use an example. I want y'all to tell me a deposit. How much money we starting with? Drop it in the chat or say it aloud.
$500.
500? All right, $500. I know in mark euros, but it don't matter right now.
I guess we should do it with 100 so you don't understand because most of us would start with 100.
All right, let's do 100, right? How much are you risking per trade?
5%.
Okay, we'll do 5%, right? What is your risk to reward?
1 to 3.
Okay. And out of 10 trades, right? Let's be very realistic. What do you think our risk win rate is gonna be? Everybody give me a number.
Like 6.
Say
60%, Rich?
Yeah, let's do 60.
Okay, 60%, right? I see. Your wins and losses are selected by random. Oh shit. 1, 2, 3. Try using this right. Okay. All right. So this the this is the result, right? So this is a random trade, not really random, but the profitability might change, right? Or the amount of trades you win and whatever other is random. So here we have basically 118 trades, right? We win 118 trades, I mean. We lost 82 trades, right? Based on the information we put in, deposit $100, risk 5%, risk to reward 1 to 3, profitability 60%, right? So what this algorithm did was it tell us, okay, we win 118 trades, we lose 82 trades based on our profitability, right? So this is what our growth would look like after 190 100 and 200 trades, right? So trade one, trade two, is win loss, win loss, win loss, couple wins, couple losses, right? Randomly spread out, right? This is what you're gonna get if you stick to your plan, right? You stick to your plan, you win over 60% of your trades. This is the result you're gonna get, right? After 200 trades, you could expect your balance to be at 1465, right? How long you take to make 200 trades is up to you, depending on your time frame, all right? But let me rerun it. So it goes set at different amounts, right? So here we win 120 trades, we lose 80 trades based on our risk to reward. I mean, based on our profitability, right? At the end of those 200 trades, we had $1,500, right? Let's say we do 40% profitability, right? So 40% profitability. And after, well, the first set of trades was losses, but once you stick to your plan, you expect your account is gonna make a bull run. You see, you don't know as much as a trade might look nice, juicy, and as much as a trade might have a million confluences, you have no guarantee which trade is gonna win and which trade is gonna lose, right? So you have to treat every trade the same. Treat every trade with the same respect, right? If you treat every trade with the same respect, this is the result you're gonna get, right? You're gonna get a bull run on your balance, right? So after 200 trades with a 40% profitability, your balance goes up for 60%, right? So let's say, okay, let's say no, after that 200 trades, you have $460 to play with, right? And remember, guys, this is 1 to 3 risk to reward. We know we just blow through 1 to 3 risk to reward. We know we just get more than 1 to 3 risk to reward, right? So this is just a minimum barrier for you, right? Like I said, the hard part is sticking to the plan. The hard part is the discipline. Rich, you already have the strategy done. Romero, you already have the strategy done. Deshaun, you already have the strategy done. Say, I already have the strategy done. You're already 50% win rate trader, right? All you have to do is work on your risk management to be profitable, work on your trading plan to be profitable, work hard, save money, and fund the account, right? Because when you fund the account and you stick to your plan, you trade your plan, you plan your trade, then you know what result you're going to get, right? So here we have, okay, we win 68 trades, we lost 132 trades, right? But we are balanced with on a bull run because why? Risk to reward 1 to 3, right? 1 win cover 3 losses, right? So after placing all these trades, with you stick to your percentage risk, and you stick to your risk to reward, right? What's gonna happen after 200 trades? You stick to your trading plan. Your balance goes up, right? Oh, deposit 460. No, I haven't run this yet. All right, so deposit 460, wins 87, loss 103, right? $460. So you see how you could go 0 to 100 right quick. You start with $100, right? After 200 trades, you make 460. 200 trades is a lot. If you stick to the plan, you'll be fine. Write out a 2-3 year plan. You don't have to start with $100. Yeah, you can start with $100, right? $100 is a little bit of money. So, you know, you won't make a lot of money, but if you stick to the plan over time, you're going to go up there, right? But while you trading, you're also working, you're also saving money to add to your trading balance, right? So let's say you place those 200 trades with $100. You make $460, but I know you're gonna make a lot more because your risk to reward is not always 1 to 3, right? And now you start with 460, right? Now you do a rerun, you're taking another 200 trades. Your win rate is 40%, it's not even 50%, right? And after those 200 trades, where your balance gonna be? 3,864, right? 40% win rate. So let me run it back again. This is for y'all to understand. I trade my plan and I plan my trade. No, I plan my trade and I trade my plan. It works. The strategy works. You have no reason to lose money unless you're not following the plan, unless you're not disciplined, right? Right now, we already passed the barrier of learning how to trade. We know how to trade, right? Right now, you're just working on being a professional trader. You already know how to trade. You already have a profitable strategy. No, you just had to stick to the plan and grow. Grow your account, grow your balance, grow your life, grow your lifestyle, right? So, let me run it one more time, right? After 3 runs. So we're doing 600 trades. After 600 trades, right? I'm sure you can place 600 trades in a year, right? Or in 2-3 years. It don't matter. So after the first 400 trades, and we started at $100, right? Our balance goes up to 864, right? And it sucks that, well, it's Friday. It's Friday. People go and party. So I understand why you don't have much people on this call, right? But this year is one of the most important calls. So thanks for showing up, right? But it's recorded, so other people will be able to hop on, right? So yeah, to 3,864 deposit, risk to reward 1 to 3, right? Risk per trade 5%, profitability 40%, right? Let me run it and see what we can get, right? wins 90, losses 110. So now you see zero, like I said before, 0 to 100 really quick. You stick to your plan. I trade my plan, I plan my trade, right? After 200 trades, let me watch it as it climb, right? Remember, you don't know which trade you're gonna win, you don't know which trade you're gonna lose. You treat every trade with the same respect, right? You watch your balance grow after 200 trades, right? Your balance basically on a bull run. So after 200 trades, how much money you have? $34,000, right? How long you take to place 200 trades and entirely up to you, right? But you know right now, everybody on this call know right now, they have the tools to make this happen. You have the tools to make this happen, right? Because the people on this call right now, you guys been a part of Mastermind Capital for a couple months now. You're not one of these January students, right? So you have experience with the strategy and only to become a profitable trader. In addition to that, we have each other, right? You drop charts, you find a nice trade. We have a trading plan. We have a strategy, right? You look at the market, you find a setup with our trading plan and our strategy. This is not my trading plan. This is not my strategy. This is our strategy, Mastermind Capital members, right? We are permanent members, right? We are permanent members, right? So if you go through the market and you find the setup, you drop it in the group. You say, okay, guys, hey, look, I find a setup. Now, Dijon Rich could put the input. Okay, yes, Romer, you followed the plan, right? So we know you followed the plan, so we know that, okay, this trade have a 40% chance of working out. We too could take advantage of that trade, or we too could correct you if you're missing something in the trade, right? But yeah, like I was saying, you have the tools, you have everything you need, right, to make this happen, right? You have the strategy. This is just for 40% win rate, right? You have the win rate, you have the strategy. No, all you need is the discipline to stick through it, the patience to stick through it, right? So after 600 trades, this would be a result if you stick to that simple plan. 1 to 3 risk to reward, 5% risk. You can risk less if you want, right? But let me keep it at 5%. 5% is like it is a safe balance because you make a good percentage return and you don't risk too much, right? And you say we want to keep it at 40 to be safe. 4 to 10 trades, right? After 600 trades, look at how much money you can make. How long you take to make 600 trades is up to you. But we know that you're capable of it. We know you have the potential, you have the strategy already down pat. So now it's just the discipline, right? To go through it and follow the plan, right? So if you have any questions or you have anything to say about what we start here, any advice also, you could drop it in. Let's see. I'll give y'all like 15 seconds.
Yeah, something. Good night, everybody. Something else I was thinking about too, the balance, like the final balance we see. Even if at the end of the day, it will be more because if we trade and then after continuously adding money into the account, we're compounding at the end of the day. So by the end of when we finish the 600 trades, we'll have more. So just really
yeah. You know, this is the analysis we just did was like a minimum, right? Because we know we will win more than 40%. We know that our risk to reward is going to be more than 1 to 3, right? So this is just preliminary results. The results could be much, much better than this. This is like, okay, a minimum, you know? So for Douglas that just joined us, right? Let me just go over this real quick. This is the Astro FX strategy calculator, right? Basically, we already did how to calculate your position size. So basically, we put in our deposit, right? We start off with $100. We put in your risk to reward, 1 to 3, right? We put in how much we want to risk per trade, 5%. We put in our profitability, our win rate, right? Here we have it at 40%, right? And then we click run, and basically the market would do a the algorithm would do a run, right? Randomly tell you, okay, based on your profitability, trade you would win out of 279, how much trade you would lose? 121, right? You don't know which trade you're gonna win, you don't know which trade you're gonna lose. So we treat every trade with the same respect, right? And after 200 trades, starting off with $100, the balance would go up to 685, right? So we did this for 600 trades, right? And okay, so now that our balance is up to 680, we change the deposit now to 680, right? Let's just do 600, and then we give it another run, right? So now we win 77 trades, we lose 123, right? And it just shows you in a random count with that 40% profitability. It changes though, right? It doesn't give you exactly 40%, right? We win 77, lose 123, but the balance grows. This is risking 5%, right? 5% for 15% reward, right? Win 40% of the trades, right? We know we have most of the time we would have a higher risk to reward, and then we would also have a higher win rate, but we're just sticking with the bare minimum for now, right? So after 2 sessions, 400 trades, how long you take to place 400 trades, up to you. The balance goes to 3,700, right? This is if you stick to your plan. You plan your trade, and you trade your plan, right? Oh, the first deposit I did was 579. So now let's see. Now the balance is 337.40, 337.34, 31734, right? We do another rerun, and this is the result you would expect. This is the result you would get, I should say, if you stick to your plan. If you're disciplined enough to stick to your plan, this is the result you could get after 600 trades, right? From trade 1 at a random order, we treat the same trade with the same respect, because we don't know. Even if we have a million confluences, we're not guaranteed which trade we're going to win, which trade we're going to lose. But we know over a period of time, we're going to win. The odds in our favor. We're going to win more trades than we lose over a period of time, right? Risk to reward, I'll be making notes. Risk to reward is more important than pips, right? Risk to reward determines your profitability, right? So over a period of time, the balance could go up to 21. Now this algorithm is random, right? Even though we put 40%, it's gonna alter it. But this is the idea of what's gonna happen if you stick to your trading plan, right? So I hope this motivated you to stick to your plan. So back to the signal room, right? Let's go in the signal room.
I just had a quick question.
Yeah.
So I know with our trading plan, you don't necessarily have to be on like the New York session or the the European session to actually make money because we place our trades in advance and then wait for it to hit our area and either take off into profit or hit our stop losses.
Mm-hmm.
So since we're not actually having to be on during a certain time, with this trading plan, are we able to look at more pairs instead of like, I know it's good to know like a couple of pairs like GBP, JPY, or USD, JPY, stuff like that, like, and know them front and back, but it's still okay to trade more and not be as familiar with them?
Well, you see the strategy we have?
Yeah.
The strategy we have is designed to trade the higher time frame and trade more pairs, right? So
Right.
the strategy we have, because we don't trade every day, because we trade the higher time frame, you could look at all the pairs, right? You could place trades on all the pairs, right? The only time you want to specialize in a particular pair is if you decide to drop into the lower time frame. If you decide to go into the 4-hour, the 1 hour, then okay, you specialize in that pair. But if you're sticking to the daily, we know that trades don't come around often on the daily, right? Trades on the daily time frame, a good daily time frame strategy, trades gonna come around a couple times a month, right? So if you think you want to place a lot of trades, then you maybe want to drop down to the 4-hour time frame on a particular pair and use the strategy. That way, or 1 hour and use the strategy. That way, you would find more opportunities, right? You would find more opportunities to trade. But on the daily time frame, you won't find a lot of opportunities. But when they do come, you know that there's a very good chance of you winning that trade, right? Like for me, when I scan in the market, you see in my watch list, I have like over 30 pairs on my watch list, right? So yeah, I have indices on my watch list too. I have cryptocurrencies on my watch list too, right? I have commodities. Well, let me actually go to my watch list. So this is my watch list, right? I go through every single one every day. So when I wake up in the morning, I start from that, and I have them in a particular order. I arrange them in a particular order, right? And I actually have three watch lists. One that's the red ones that's highlighted, and then this one, and then another one, right? So I tap on oil, and I'll go on the daily, right? If I see okay, I'm on the daily, weekly, and I see okay, oil coming up on a zone, then I would start paying attention to oil, right? I would mark off my daily zone. I would even put an alert on, right?
Why did you put a tab?
I didn't like it. Anyways, so yeah, so like I said before, on oil at the end of the daily chart, I mean, if I'm looking at all these pairs, most of the time it's just the daily time frame I'm looking at, right? The daily, weekly, monthly, right? It's only when we come near a daily, weekly zone, then I would start paying attention if I need to get 4-hour entry, right? Or daily entry. So then once I go, it only taken 3 minutes, 3 or 2 minutes to go to scan oil, because it's a daily time frame. It's just one candle new, right? So then I just drop down. Okay, this is what going on NASDAQ. Make a scan through. All right. Go down to this one. Go down to BTC. Okay. XRP. You know, go down the list basically, right? Any little updates I have to make, I make those little updates, right? All my zones, like any new zones, I highlight them, right? On the lower time frame now, for example, on the lower time frame, if I drop down on oil on the lower time frame, I have this little red line here. This little red line simply tells me, okay, on this lower time frame, this was the last, this where the price was the last time I looked at it, right? So I would see what happened after I looked at this pair on the 4 hour or the 1 hour time frame. I would see all the new candles. I don't have this on the daily time frame. I just have it on the lower time frame, right? That's for the pairs that drop down time frames in, right? So I just back to the daily, right? Every day I go through all of these pairs. It takes me a couple minutes. I go through all of these pairs and update them, right? Or if there's a signal, I send out the signal, right? Or I update I would look to see, okay, if I updated any pip counts, I'll update them, right? And then I even have like a few stocks here as well, right? And there's still some pairs I don't have here that I need to add, but I'm gonna add them, right? So where was I? Yeah. So this is what we did before. This is what we're doing now, right? So when it comes to signals, you want to be an independent trader. You want to essentially one day wake up and you don't have to rely on signals or confirmation, right? This signal group is simply a guide, right? It's a guide to make trading decisions. Every signal that is sent, you don't have to take it. You could choose your preference. Choose whichever signal, whichever ones is your favorite, you know? But those signals are just sent based off of the strategy, right? Now, when it comes to take profit, moving a stop loss, all of that, like I said before, is a guide. When you get a signal, if you know you're aspiring trader, aspiring to be a professional trader, you don't just enter this signal into your account. You pull up your own charts and look and try to find out why I decided to send this signal, why we enter in here, why our stop loss is here, why our take profit is here, right? If you can't tell me that, you don't know, ask, right? So at least you know, okay, yeah, this is why we're taking this trade. And if you know the confluences yourself, you could be more confident in that trade, right? Now, when it comes to taking profit, closing a percentage of your profit, like I said, is a guide, right? If you're satisfied with 1 to 3, that's on you. If you're satisfied with 100 pips, 50 pips, that's on you. If you want to keep holding, that's on you. For me personally, I like to close a percentage of the trade because we don't know how far the trade gonna run. Because we're on the daily time frame, sometimes a lot of these trades they end up running all 600, 700 pips. They end up on a nice long bull trend. So that's why I don't close an entire position. I'll close a percentage of a position, right? So usually nice targets would be you close a percentage 1 to 1, you close a percentage 1 to 2, you close a percentage 1 to 3, you know, and so on, right? We have what we call runners. Basically, you want to take some profit and leave a runner. A runner is a position you leave to run as long as the market want to run, right? You don't care. Yeah, 33% is good, you know? You want to leave a runner because you don't know how far the market gonna go, right? And in addition to that, you don't have to always take an entire position. You just move up your stop loss, right? If you want to secure profit, you don't have to close a position. You move up your stop loss 30 pips. You move up your stop loss 40 pips, right? Just to secure profit. You don't want to give back the market profit, but you want to keep some position in the market, right? So a lot of the time, sometimes even when it comes to um the market, you know, for yourself, the market kind of tricky. Sometimes we had like a couple good trades this week, and sometimes the market just want to hit your stop loss. So then we had to re-enter, right? But we don't worry about it because we gonna get back the money. Sometimes the market want to drop 50 pips and then come exactly back to your entry and break it out, take it out at break even and then drop, right? A strategy I had for that when that used to happen to me a lot. This is why I say secure percentage, right? Because let's say you're in a trade and the market, let me do this visually for you, right? Let's say, right, you enter a buy here, right? Let's say you're in this trade and the market goes up 50 pips, right? Your stop loss is down here. Your stop loss, let's say this is your stop loss. Actually, let me use this, right? Let's say the market goes up 50 pips, right? Now we know that the market like to play games. So what the market tend to do, if everybody go break even here, sometimes the market will just come out to take out the break even traders and then shoot, right? So this is why I would say, okay, at a 1-to-1, 1-to-2, 50, 100 pips, secure some profit. That could be 20, 33, 50% of your profit, right? Because the market will pull back. Sometimes the market will pull back, right? And if it comes back to entry, then you could just add another trade. Or if you're not, you see, securing some profit, there's securing profit and there's going break even, right? If you secure your profit at some profit at 1-to-1, right? Let's say you secure your risk. How much money you was risking? If you was risking $10 and the market go up and you're in $30 profit, but then you close out 33%, you close out what you was risking, right? Even though you didn't move your stop loss, you just close out a percentage of your position, right? Essentially, on this trade, you're not risking anything, right? Because if the market comes down and hit your stop loss, you're not losing any money, right? Because you already secured this much of your profit. You secured $10. That $10 you're risking, right? So whenever you're in a trade and you know you're not risking nothing, don't worry about it. If it hit your stop loss, fine. You move on to the next trade, right? Somebody once told me, money you haven't closed yet is not yours. So if you're in profit and you haven't closed the trade, don't consider that profit. Don't consider that you win. Don't consider that money that's yours. Until you close the trade, the money is not yours, right? So if the money is not yours, don't worry about it. If you want the money to be yours, secure some profit. Don't be afraid to close trade. Don't be afraid to secure profit, right? And also don't be afraid to leave your stop loss where it is, right? Because in trading, to be disciplined, to follow the rules, you have to be a robot. No emotion. You can't feel greedy. You can't feel euphoria. You can't feel happy. You can't feel anxious, right? You celebrate your wins the same way you celebrate your losses. You win, okay. You lose, okay. You followed your plan, yay. That's what you celebrate. You celebrate following your plan because we know this plan is going to send your account on a bull run, right? So, like I was saying before, like people different. Yes, I have a plan about adjusting your stop loss or whatever, but there's different ways you can do it. You have to figure out what's good for you, right? You have to figure out different people are different personalities. Different people make feel different ways about the market, right? So The strategy I give you, you have to make it yours if you need to adjust it. This is not the strategy I got. This strategy I have is a combination of many different people's strategies that I kind of decide, okay, kind of make my own in a farm, right? And also stuff I learned from just being in the market experience, right? But you had to make the strategy your own. So you could, if you find something that works for you, then you could adjust. If it doesn't work for you, then you could adjust. But you know you have a winning strategy, you know? And if you want to learn something new, just test it out in the market. Back test it out, take notes, right? You have to keep learning. And you don't just learn through mentorship, you learn through experience, right? So you go in the market and you experience new things. Like I was in the market this week and I learned a few new things. I learned some new stuff about the market just being in the market this week, right? And this what I just show you here. I just learned this week. I just innovated because I was doing research, right? So this here I could come and introduce this to you and give you more confidence in your trade. So you could go and do this yourself, right? But yeah, so Douglas, Rich, Deshaun, Romero. When it comes to taking trades, one, what I recommend, you secure some profit at 1-to-1, right? If you want to go, if you want to, because capital preservation is one of the name of the games, right? So if you feel like, okay, this trade, let's say this trade is over 1-to-3 risk to reward, then you can be comfortable securing your risk and leaving the rest to run, right? If you win the trade, then great. If the trade pull back and stop you out, great. Because you don't care what happens. You secure some profit. Let's say, and you don't move your stop loss. So if it comes down here, then you're back at your entry, but you already secure some profit, right? So as long as it doesn't touch your stop loss, you're still in the win. If it touches stop loss, then you're out at break even. You didn't make any money, right? However, an additional step, let's say you secure 1-to-1, right? And then you move your stop loss to break even, right? So now, if this trade is a losing trade, then you don't lose anything. You just lose you just win 1-to-1, right? You just win what you was risking. But if you're confident in your strategy, right? You're confident in your risk to reward, you're confident in your 40% win rate, then you don't need to move your stop loss, right? Because you're confident in your trade and you're confident that the trade is going to work out, right? Because if you move your stop loss to break even and the market comes, sometimes the market like to test the entry a couple of times before it launch, yeah? And the market come down and stop it out. This happened to me with Euro GBP this week on one of the accounts. The market come down, it stop it out, and then it fly up to 100 pips, right? That happens a lot. That happens if you're not confident in the trade, then you would move your stop loss to break even early, right? And if you're insecure in any profit, you get breakout at break even. You get breakout at this is why I say, you see, this is if you secure 1-to-1, right, and you don't move your stop loss, then this would not happen to you, right? Because you secure 1-to-1, you secure a percentage of your profit and your stop loss is still at where it's at. If the market comes down to break even or even comes down into loss, right, and then goes up the 100 pips, you gain 100 pips. You instead of gaining no pips, and you're not risking anything, right? Yes, you can move your stop loss to break even, and you're not risking anything, right? If the market goes your way, yeah, you make money. But also, if you secure 1-to-1, You're not risking anything. And then if the trade goes according to plan, then you win the trade, right? Up 2% break even at stop loss. Okay, Douglas. But yeah, we had some great trades this week. I'm starting to get a real understanding of US 30. US 30 seems to like our strategy, right? Because let me just go through US 30 real quick. All right, this is a long session, yeah, I know. So we know based on our strategy, right? US 30. We had a zone created here, right? And then we had a zone created here, right? On US 30. So I sent out a signal for short right here on US 30, right? This week. And this was 400 and something, or 300 and some pips, right? So because these this was supply, right? So because these demand zones was removed, a little for the advanced students, we had a new zone that was created, right? Which was here, right? And then the market came up, tapped the zone again, and then dropped, just like counterpart, 400 and something pips, right? Even though for this trade, I did not stick to my plan. I got impatient and I closed the trade. And as soon as I closed the trade, the market dropped 400 and something pips, 300 and something pips, right? And then after that, that's when I realized, oh, I need to stick to the damn plan, you know? So just like this strategy is fractal. So you could drop time frames and still play trades, right? This morning, catch a couple pips right here. I didn't send it in the group chat because I know a lot of people don't trade US 30, and I felt like I sent out a lot of trades this week, and a lot of trades we catch hundreds of pips this week, right? So I didn't want to be greedy, right? So I'll continue to monitor US 30, and for those of you who could trade US 30, we're looking forward to a bright 2020, right? Because US 30 seem to be respecting our strategy. But I'll continue to backtest it. Right? So yeah, we've been on here for an hour and 13 minutes. I hope everybody made notes. Your job now. Write out your plan. Print it out. And I just showed you, if you stick to those plans, the results you're gonna get. I'm going to do it. Right? You have to do it too. And like I said before, everyone in here are permanent members of Mastermind Capital. So this is our strategy, right? We want to represent good, right? We want to be profitable. We want, when a year from now pass, 2 years, 3 years from now, we could all sit down in a room in Dubai and make some money, right? So I wish you all the best, right? And we're gonna lock it off right here. And make sure you drop a message in the group chat to let everybody know how good this class was so that they watch the recording. All right? Have a good night, everybody, and have a great weekend. Yeah? Miami. I'll be in Miami soon. But yeah, have a good night.
Yeah, you too. Thanks for the session. It was a good one.
Yeah.